Insurance tends to be like a fairly sort of dry topic where you think about, why would I want insurance? But I always think about it this way. If we insure our cars, our houses and so on, why wouldn't we insure our ability to have the same lifestyle, for example, if something might happen to us?
We've got some fresh new young talent doing some things that I know you haven't heard before.
1, 2, 3, listen.
Welcome to the Young Minds podcast, hosted by Burke, Britton Financial Partners. I'm Brady.
I'm Daniel.
This podcast helps young adults build confidence and clarity when it comes to money, empowered by youth, inspired by experience. We know that navigating the world of finance in your late teens to 20s can feel overwhelming, whether it's understanding your first payslip, learning how to invest, managing student debt, or just trying to save without missing out on life, because believe it or not, it is actually possible.
That's why this podcast is here, to make finance more accessible, more understandable, and way more relevant to your life right now. Each episode will break down key financial concepts, give you practical tips you can actually use, and have real conversations about money. From budgeting and credit scores to purchasing your first home, we will cover it all.
As university students coming to the end of our degrees, we created this podcast not because we have all the answers, but because we're asking the same questions you are. Each episode will be accompanied by a qualified financial advisor from the Burke Britton Financial Practice to provide insight and guidance in topics to come. No confusing words, no lectures, just honest insight to help you make smarter money moves now and in the future.
So whether you're studying, working, or figuring things out, you're in the right place.
Perfect. So before we jump into our podcast today, I'd just like to do a bit of a plug on our GYP event, Geelong Young Professionals. Burke Britton are the main sponsor for this event. It's being held at the Geely dealership down on Gordon Avenue. This is something we're really, really super excited about. It's good to see lots of young professionals out there networking, meeting lots of people around Geelong. It's a great event. So if you'd like to register, jump online and we'll see you there.
Accompanying us for today's podcast is Delta. Welcome back, Delta.
Thanks, Daniel. Thanks, Brady.
Perfect. So today's all about insurance. So if you've ever wondered why insurance exists and how it can actually protect your future, today we're going to be breaking down the mystery behind insurance in a way that's simple, relatable, and maybe even a little bit surprising. So Delta, let's start with the basics, because insurance can feel like a little bit of a maze if you don't know where to begin. What are the different types of insurance and how do they compare?
Yeah, great question, Daniel. So insurance tends to be like a fairly sort of dry topic where you think about, why would I want insurance? But I always think about it this way. If we insure our cars, our houses and so on, why wouldn't we insure our ability to have the same lifestyle, for example, if something might happen to us? So there's a few different types of insurance that we'll touch on today, and there's sort of the four main types when we think about life insurance. So that's around life insurance. So as the name suggests, that's paid effectively to your estate if something happens to you. That's a lump sum amount. Or if you're in the unfortunate position where you might have, say, a terminal illness diagnosis. So, pretty difficult time, obviously, if you're experiencing those sort of events in your life. Then we have what's called total and permanent disablement insurance. So as the name suggests, if we are permanently disabled and we can't return to the workforce, that's designed to replace our income for what would have been our working life. And again, that amount there is supposed to enable us to pay our mortgage, for example. If we've got mortgage or other debt commitments, we've got to feed ourselves, we might have, children and so on to look after. So that's the reason for total and permanent disablement insurance. Then we have income protection insurance, which for the audience might be sort of, top of the list when we think about priorities. So income protection insurance is designed to replace our income if we're temporarily unable to work, and that might be due to an illness or an injury, for example, that means we're off work for a period of time. So if you think about that from a sort of a safety net perspective, again, if you're going to work, the reason we all go to work is so that we can live the life that we want. So having that income continue in those types of events is really important. And there's a few different sort of levers and options there with income protection insurance. And then the fourth type of insurance that's probably less commonly known is what's called trauma insurance or critical illness insurance. And this insurance is intended to provide us with a lump sum if we have an unfortunate event like cancers and strokes and those types of, really horrible things that can happen in life. And it provides that lump sum so that we can really just focus on our rehabilitation. That might be partner having time off work to care for children. It might be a break in study, any of those things. It's really just to give us that safety net so that we're not adding financial stress at a time we really need to be focusing on ourselves. So, sorry, that wasn't very short, but there are a few different types of insurances that we can have.
No, that was perfect. That was a lovely breakdown of the four main insurances you can get. And the next question we had is, when do you actually need those insurances? Yeah,
that's a great question. So there's a number of different ways you can think about this as far as when you might need it. But really, when we think about insurance, it's just a safety net. Nobody wants these really unfortunate events to happen in life, but I'm sure everyone listening can reflect on someone that they know that's, had a medical event or something happen in their life with, their extended family perhaps, where they really do need a safety net. So, yeah, insurance steps in and it's just designed to provide a safety net or the way that it's sort of legally described is it's actually transferring the risk of something happening to someone else, being an insurance company. The insurance company then takes on the risk that something might happen to me as the example, and they will provide me or my family with finances as that safety net. So I would say a lot of the population need insurance, and there is a chronic underinsurance issue in Australia with only something like 5% of the population actually having enough insurance. So, yeah, it's a little bit alarming for us in our role in protecting, the wealth and so on that we're building for our clients.
Yeah. Okay, now we know what insurance is, why it matters. Let's talk about how to actually get it and make it work for you. So how much insurance is actually enough? Like, is there a magic number? Does it depend on your situation?
Yeah, great question, Daniel. So it's entirely dependent on your situation. So, again, are you younger, maybe still living at home if you're studying, for example, so your cost of living perhaps is supported by family members and so on. So arguably your need for insurance is not as significant, but maybe you're, a young couple with young dependent children, you've bought your first house, you've got a big mortgage. There's lots of factors that come into sort of how much is enough. So for our clients, we always run an analysis or an assessment on specifically what they need. So again, if you've got debt, for example, most people would like to cover that debt if something were to happen to them or their partner, and then they would also like to ensure that there's a buffer above that debt to provide their loved one with, again, perhaps some time off work or, funeral costs, just some breathing space around, again, taking away financial worries at what would be a very difficult time of the loss of a loved one.
Alrighty, so we've talked about what types of insurance there are. We've talked about how much you need. We've talked about whether you actually do need it and when the right time is. How do you actually go about getting these insurances? What's the process?
Yeah, great question. This is one that's perhaps less commonly known around sort of the processes around insurance. And again, it tends to be a fairly dry sort of subject, so it doesn't excite people much. But again, it's simply just a safety net. So when we think about insurance, we, for our clients, assess all of the factors that would make up what level of insurance and what type of insurance they might need. So when we have that analysis completed, we think about things like what cash reserves do they have as a household that they could draw on temporarily if they needed to? What sort of leave provisions? Is this somebody that's been with the same company for a decade and have a lot of sick leave perhaps that they could draw on in those types of events? Or is this somebody fresh into the start of their career and they don't have those leave entitlements? So all of those factors then inform the level of insurance. So then let's say we have an example of income protection. So income protection that protects your ability to go to work and generate an income is normally at 70% of of your salary. So we can't get higher than 70%, for example. So if you're starting out in your career, you go and get income protection that covers 70% of your income at that point in time. It's not as simple as just saying, can I please have that insurance? We actually need to go through a process of applying for that insurance, because the insurers are basically looking at you versus your peers and whether you might represent a greater risk than one of your peers as far as any medical history, family medical history, knee, joint injuries from sporting involvement that you've had over the years. So for us, we start that process with what's called a pre-assessment. And I know, Daniel, you've had a fair bit of experience in this space, so I might let you answer and talk about what we call the pre-assessment process.
Yeah, so a medical pre-assessment is pretty much a questionnaire that you fill out for the insurer, just letting them know any current or previous health issues you've had, or whether it's a surgery on a knee, say, from sport. And it's just more so for the insurer to determine, is this person at more risk than the average Australian at the same age? And yeah, it pretty much just lets them know, how to assess you, and will there be an exclusion or a loading on that client.
Yeah, and the way that we run that process, it's anonymous. So when our clients disclose that medical and a little bit of financial information, that information is sent to our insurer panel anonymously, so that we can get a gauge on whether or not some loadings or exclusions might apply. And I know we're going to explain what they are in a moment, but that gives us a really good basis to be clear on how we can support that client with the right level of insurance.
Perfect. Thanks, Delta. We'll talk about dollars and cents now. So paying for insurance can be a little bit confusing because there are multiple ways that you could do it. So maybe just explain, how do you pay for insurance? Is it through super? Can you do it personally? What's the difference between, paying them each way, and why does it matter?
Yeah, great point, Daniel. So quite commonly, you would potentially already have some insurance and be paying for that through your superannuation fund. So you may have received some insurance automatically when you joined as a member. And, that depends on when you joined and how long you've been a member of that fund and so on. So superannuation can actually fund the bulk of your insurances. So you can hold life insurance, total and permanent disablement insurance, and income protection insurance through your super fund. So the reason that you might sort of consider that is simply from a cash flow perspective. Your household budget might be, a little bit stretched. So your preference might be that your superannuation acts as a vehicle to fund that insurance cover that you need. The other type of insurance, trauma insurance, can only be owned personally. Therefore, your super fund can't pay for those premiums. We consider all of those options when we work out what's right for our clients. And one of the factors around income protection is that if you choose to pay it personally, you can actually claim that amount as a tax deduction against the income that you generate. So, that can be appealing depending on which tax bracket you're in. And, that might be as your career progresses and you're generating more income, that you are looking for some other tax deductions that, again, provide you and your family that safety net.
Perfect. And we've talked a little bit about having insurance in your super fund. This is I had no idea about this until I started working here. So as a young person, how do we find out if we actually do have insurance in our super?
Yeah, great question, Bridie. Can you tell me what did you do when you heard us talking about insurances in super?
First thing I did was I opened my my superannuation app that I've got on my phone. I'm with Rest, so I just went in there and I was like, where do I find this? How do I look for this? And turns out I didn't have any super, so that wasn't great. But that's one way I know of that you can check for it.
Yeah. Can I ask you the same question, Daniel?
Yeah, exact same thing. Literally just opened the Rest app and just had a look to see what was in there, and unfortunately nothing, but yeah, it was a good eye-opener.
Yeah, so I think historically super funds would provide their members with that automatic insurance. So you just joined and they said, here's a bit of insurance based on perhaps the income that your employer reported to them as you earning, looking at your age and so on, and you'd get a little bit of insurance. There were some changes around that from a legislative perspective, because there was some thought that people were paying for insurance that they potentially didn't need. I see it a little bit differently from a professional perspective, because often that was a safety net that people had they didn't know they needed. So where they did have those events in life where they went, oh no, what are we going to do? They could actually go to their super fund and they realised they actually had some insurance there. So first and foremost, exactly as the two of you have done, go and check your super fund and see if you actually have some insurance already within your super fund. So it might be some life insurance, some total and permanent disablement insurance, and some income protection insurance. If you're in your super app, go and check your investments too and see where your money's actually invested. So there's a bit of a tip if you're in there, and look at things like your beneficiary.
Yeah.
So, generally when you're starting out your working career, probably not high priorities for you, but just looking at how the proceeds or how your super is invested can make a really significant difference over your working life as to the outcome at the end of your working life. And even things like your beneficiary. So your beneficiary basically determines who would receive your superannuation and or any life insurance that you hold in your fund if you were no longer around. So just checking if you have someone nominated, and sort of doing some of those little tidy up jobs that are, not high on the priority list, but are actually really important to consider.
Yeah. Before you do sign up for insurance, there's a couple things that you should know or you need to know about how the insurers make their decisions. So before Delta, we touched on what loadings and exclusions are. So maybe if we just actually explain what they are, why we should care about them, and how do these affect like the coverage or the level of coverage and the cost of insurance.
Yeah, okay. So when we think about loadings and exclusions, as I said earlier, the insurers are basically looking at the person who's applying for insurance and trying to work out if they are going to be any higher risk than one of their peers in potentially making a claim. So insurance companies, when we apply for the insurance and are granted that insurance, have a condition that they have to keep providing us with that cover. So they're looking at the potential risk that we might pose to them forever. So it's not just at a point in time, because they've got that obligation to keep renewing that insurance. Therefore, when they're doing that sort of risk analysis and it's not personal, like this can be, a little bit confronting sometimes when our clients go through this process. It's not a personal sort of assessment on that individual. It's just simply looking at the facts around the potential that they'll make a claim, again, as in contrast to one of their peers. So they want to offer insurance, but there might be instances where, let's say, for example, you've been a footballer or a netballer and you had a knee replacement, and there's a concern that that might present some future medical issues. The insurer, rather than saying, no, we won't give you any insurance, they will give you what's called a revised term, so a policy that looks a little bit different to your peers. So those revised terms can include things like what's called an exclusion, where they might say, sure, you can have some insurance, Daniel, but because you had a knee replacement, if you have an event that is connected to your knee injury, we won't cover you in that circumstance, but everything else you'll still be covered for. If you have a number of these things, that might be where they consider whether or not they offer you cover, or they might simply consider offering you cover but increasing your premium, which is what's called a loading, in contrast to your peers. So they do try and find ways to ensure that they can offer you cover, but again, it is unique to your own set of circumstances and, sort of family history, whether you're on medications. There's obviously a greater prevalence of poor mental health, and that can also impact outcomes as far as applying for insurance in the first case.
Lovely. Well, before we wrap up today, just a big thank you, Delta. It was definitely very eye-opening learning all about these different types of insurances and how it can be in your super. Definitely go check that one, people. So just to finish off, if this episode has sparked a curiosity, take the next step. Check your super fund and see if you already have insurance, and share your thoughts with us on social media. Let's keep the conversation going. Thank you very much.
Thanks.
We hope you enjoyed today's episode. If you're keen to understand more about how financial advice could benefit you, Follow us on Instagram, Facebook, and Twitter at Burke Britton FP, or Google Burke Britton Financial Partners. Check out our client reviews, testimonials, and make a time to meet one of our certified financial planners by clicking Book Now on our website. Thanks for listening.
Any information contained in this podcast is of a general nature only. No account was taken as to the objectives, financial situation, or needs of any particular person. Therefore, before making any decision, listeners should consider the appropriateness of any information with regard to their particular objective, financial situation, needs, and seek independent advice from a licensed professional specific to their circumstances.
That translates to don't be a moron and act on what some random person says on a podcast. Take personal responsibility, do your homework, ask questions, and speak to an actual human that knows what they're talking about before you do anything. PB Financial Solutions Proprietary Limited, trading as Burke Britton Financial Partners, are authorised representatives of AMP Financial Planning Limited, AFS, licence number 232706.